Nice to have you guys here. Good afternoon, everyone. Whatever part of the world you're joining us from, good morning, good evening. Nice to have you guys. So today we're live at Fire Thief Studios to teach you Forex. So in today's episode, we have a specific topic that I want to be taking you guys today. We noticed that the previous episode, you guys noticed in the comment section, there were comments that it wasn't so clear. So today, with the best of quality streaming from the studio again, we have to retake some of the topics that we taught you guys before. And today's topic is going to be talking about leverage and margin. So, but before we proceed, kindly let us know where you guys are joining us from. Right now, we're in Lagos, Nigeria. What's your location and what's your name? And I'd love to be reading out a few on the screen right now. I'll project some too on the screen. So I know we have a lot of people joining us all the time from Lagos, from Abuja, from all over the Europe, Asia countries, and America. But then let's just see people where you are joining us from. Where you joining us from? Please kindly project some the location. Just project on the screen. Show on the screen. Click some on the screen. Ray, you want to help us to click on the location on the chat section? Okay. I get it. I can't see some. Okay, we have some from Ghana. Okay, keep going, keep going. Is that Lesotho? Ado Ekiti. Keep going, keep going, keep going, keep going. Abeokuta, Cyprus, Namibia, and so on and so forth. Well, nice to have you guys, all of you that are joining us all over the globe, South Africa, from Dubai, from Namibia, from Nigeria, wherever you guys are joining us from, you guys are welcome. Today, we want to be training you guys on leverage properly, leverage and margin. All right. So without further ado, I'd like to show you guys some slides. And today I also have with me Shams. Shams, are you there? Shams, you want to say hello to the people?
Hello, guys. Good afternoon, good morning, good evening, depending on where
Shams,
you're
are you
joining
there
us from.
on the screen?
I'm there. I'm there.
I
Yes.
can see that
Okay.
he's trying to talk, but then we can't hear him.
Can you guys hear me? Good afternoon,
We'll stream you
guys.
out live.
Good morning, good evening,
Please
depending
stream
on
you
where
out
you're joining me
because
from.
I don't
I
think
think,
Shams can hear us, or we can't
yeah.
even hear him now.
Can you guys hear me?
Okay, he's good.
Uh,
But I can't see him. All right, good. So Shams, are you good? Can you hear me clearly, Shams?
I'm with you. I'm with you. I can hear you. Good afternoon, good morning, good evening, depending on where you're joining me from. If you can hear me, type one on the chat box. Let's go, guys. If you can hear me, type
I
one
can
on
hear
the
you
chat
now. I
box.
can hear
Let's
you
go.
now. Amazing. The one I have on my previous screen is not showing you here. I don't know
Right.
why. Nice. Okay, good.
Okay.
So
Okay.
give me the
As
previous screen.
usual.
I mean the slide. The next one. So today's topic is understanding leverage and margin. We've decided to take it this way so that you guys can clearly understand, because the major goal here at Fire People and this essence of this live Wednesday live stream is because anytime that I see people really struggling about forex knowledge, most especially basic things, it really saddens my heart. I mean, these are some information that are readily available online, but because of uh, some people misconstrue these things, that's why I've tried to want to put them in a video format and make it a lot more simpler. So the only goal I have here now is to make it a lot more simpler for you guys, right? And also so that you guys can start putting things into practice. Do you guys know it is because of the knowledge of leverage and margin that you can flip account? There's some of the YouTube guys that I started watching of recent that these guys, their understanding of flipping is crazy. But one thing that made them to be able to flip account to turn $5,000 to 2 point something million dollars is because of the understanding of this thing. So you better start taking this whole thing serious. And I also flipped an account the other day, $800, I made $3,000, which is what I used for my weekend, was because I understood what leverage is and what margin simply is. Now, the next slide, let's go. What is leverage first? Leverage is an amount of money that the broker lends to you to do business for that time being. Remember, the goal is to make it a lot more simpler for us. So that's why I'm going to be using simple terms. Imagine you are into business, you're into cement business, for example, and you are dealing with Dangote. Dangote is obviously right now the richest man in Africa. So Dangote meets you, say, okay, let's use Andrew as an example. Andrew is doing business with Dangote, and he has money to buy only 100 bags of cement. And it's meant, let's just say, let's cap it at 5,000 naira per bag, right? So Dangote says, okay, Andrew, I see you're a very strong guy, hardworking guy. What if I give you a leverage, a capacity for you to be able to do times 100 of what you are doing right now? What does that simply mean? Someone who was doing 100 bags before times 100, that means he now has the capacity of doing how many bags? 10,000 bags. That is leverage. That does not mean Dangote is gifting him that money. It's not a grant. It's not dashing him the money. Do a business where you were buying a bag of 100 and then you go back to sell, maybe you're making, say, $1,000 out of that 100 bags before. Now, since you now have 10,000 bags times times 1,000, that you are now able to now make at least say $10,000 back in profit extra, just because he gave you what leverage, 10,000 or just 1,000 times whatever leverage gives you. So that's what leverage can do. And then when you are done, you return his capital, the principal that he gave to you, and then you have your profit all to yourself. That's what leverage simply is. So leverage is an amount of money that your broker lends to you to do business. Once you are done, you give them back their capital, and then you keep the profit, 100% profit. Then the next question might be, why are these brokers, why would Dangote want to single me out and give me money? Does he love me? What's special about me? Good. With brokers, the essence, not until the late 1990s and the popular, and when technology started becoming so popular, we individuals are not allowed to trade forex because of the huge amount of money that is required to participate in the financial market. So the brokers coming to participate, the only deal they signed was, don't worry, since these guys are going to be having $100, $1,000, we are here to bridge the gap. For us to bridge this gap, we are going to give them leverage so that they'll be able to participate. Even with as small as $100, they'll be able to participate. So even if they come to the market with $100, you're going to give them a leverage of 1 to 1,000. So their $100 is no longer going to be viewed as $100. It's not going to be viewed as $100 times whatever leverage you select at the back end. So if you select a leverage of 1 to 1,000, it's going to be 1,000 times 100. That means you have a buying capacity of $100,000, though you have $100 in your account. So that is it. So the next slide, that's the essence of leverage. The next question is, how does leverage work? Next slide. So imagine you want to buy a house worth $100,000, but you only have $1,000, just as I explained earlier. Leverage in trading is like getting a loan to buy that house. With a leverage of 1 to 1, 100 to 1, or 1 to 100, your $1,000 allows you to control a position worth $100,000, which is what I have explained earlier. So have you ever noticed someone who has an account of $100 and you see the person placing one standard lot size? Meanwhile, ordinarily, we will not be able to place that one standard lot size because of leverage. All right. So give me this screen. Let me do a brief explanation of what that simply is. Give me this screen. Good. So first, I want to lay a foundation as to why is this important. Why can't you just use your money? Why do they have to borrow you money? In order for you to trade in the financial market, everything is in form of lot sizes. Everything is in form of contractual sizes. Let me spell out the one that you require. Let me spell out the one you require. So, okay, let me just write it down. I was trying to look for an empty space and all that. So, in order for you to trade in lot sizes, in contract sizes, we have three different. We have standard lot size, standard lot. Everything is lot size, lot. All right. We have mini lot size. We have micro. All right. So standard lot size is from 1.0 upwards. 1.0 upwards. So we even have up to 1,000 lot size and even a lot more, on and on. All right. before. I'm coming there. Mini lot size is 0.1 lot size. A micro is from 0.01 to 0.09. 0.09. Same category. Then this one is from to 0.1 to 0.9. All right, that's on the mini. Then 1.0 to 1000, as so on and so forth, and all of that. Okay, so now, why is this numbers possible? Now, if you want to just trade 0.01, the minimum amount we should just be talking about for you to be able to carry out a trade, to place a trade in 0.01 on any trade, you need $1,000 minimum. All right, you need to have $1,000 to place 0.01. All right, so even if you have $1,000, you are willing to want to invest $1,000 in trading, to be placing 0.01, you know the profit of 0.01, it's always very small. Each pip movement with 0.01, you get to make 10 cents. 10 cents on each pip movement with 0.01. With 0.1 on each pip movement, you get to make $1. With 1.0 on each pip movement, you make $10. So we want 1,000 standard lot size. With each pip movement, you get to make $10,000 on each pip movement. This is how everything is well aligned. But the amount of money you need in terms of units to be able to carry out this small one, you need $1,000 minimum. The amount of money you need to carry out this one, you need $10,000 minimum. The amount of money you need to carry out this one standard lot size, you need 100,000. All right. Just for you to make one each pip movement, you need to deposit at least 1,000 to be able to carry out. That's a lot of money. Even if you have this money, you don't want to be depositing this money to be making this. That's why leverage is important. So whether or not you're a rich man or you're a poor man, you need leverage. You'd agree. It's just only wise. Why you want to use 100% of the money when you have broker being able to provide for you to use their money? All right. So that's why this lesson is important for everyone. Okay. So the next slide. The next slide. Now, I would like to tell you guys the advantages and disadvantages. Why is it that some people, even with using people's money, some people still think that leverage is a bad idea, it's a bad thing? As a matter of fact, it's a regulation. In the United States, you are not allowed to use, as a broker, you are not allowed to operate if you offer a leverage of more than 1 to 30. What does that mean? We have different type of leverage. We have a leverage of 1 to 2. We have 1 to 100. We have one. Anytime you see leverage like the 1 to 100, 1 to 2, whatever, simply means for every $1 you deposit, you are going to multiply it by this other number by your right hand side. That's leverage. So if you select a leverage of 1 to 100, if you bring $100, it's going to be times 100. That means you're going to be having 1, 2, 3, 2, 2. That is, your buying capacity will be 10,000. That's what this would mean. So this is your $100 you bring times whatever leverage they give to you. If you're in United States is not saying that there must be a reason why they're bringing that law. US is not saying that if you have the intention of giving our people more than 130, don't operate here. We don't want to give them too much money. Why? So there must be some disadvantages to it, right? That regulation, US and Canada. Explore the advantages first before we go to the disadvantages. Why US is wanting their people, they're protecting their people against it. So number one advantage is increase potential earnings. Imagine, remember the example of someone who was doing business with Dangote. You have the capacity of doing 100. Dangote says, don't worry, I'm going to allow you to be able to do 10,000. What would have happened? Where you were supposed to be making $1,000, you now made $10,000 in profit. It exposes you to more potential earning. All right. The next advantage is trade larger position with less capital. You don't have to be putting too much margin down. All you just have to do, just drop 1%. Then the broker brings in 99%. And he also enhances trading capacity. Then you now know, okay, you can trade, you just make sure, you just allow you to make more profit, make more trading decision, be able to take more contractual lot sizes, explore another pair. Once you're able to drop 1% on GBP USD, let's say for example you drop 1% on GBP USD, you can go on Euro USD, drop 1%, keep dropping 1%. Just like buy many cars or buy many houses when you are leveraged. If you have to pay 1% of every house, what do? You go everywhere. Say, okay, drop 1% here. This one is my house. Drop 1% here is my house. But then there's a disadvantage side of it. So let's go to the disadvantage side of being too over leveraged. It increases risk. This is the major reason why the United States is against it for their citizens. It raises potential for larger losses, and then margin calls demand additional funds in losses. Okay, good. Let me delve deep. Why this disadvantage, the major disadvantage is. Now, give me the screen. The screen. Someone who is using leverage of 1 to 1,000 and you have $100 account. You know, whatever they give that is good. Some people can overdo it too, you know. Some people can overdo it. Someone with an account of $100 would not go and choose, because you want this $100 to be like $1 million. You will not go and choose leverage of 1 to maybe 2,000. What that simply means is he's coming in with $100, so his buying capacity is now 2 times 1, that's 2. 1, 2, 3, 1, 2. I think so. 1, 2, 3, 1. So he's now having a buying capacity of $200,000. Buying capacity. It's not his money, it's just buying capacity. He's not having. All right. So remember the units that I broke down. In order for you to be able to place one standard lot size, you are dropping 100,000 for you to be able to place 1.0. And there's nothing that should even concern you with 1.0 when you have a $100 account, because it's too much in the first place. But with this leverage sum, you can even go ahead and even place not just 1.0, you can even place 2.0 since you can afford it. Because to place 2.0, you need 200K. You have it because broker already gave it to you, though you have $100. Now, let's say, for example, this person understands this knowledge and he explores everything. He goes on his MT4 and places 2.0 by GBP 2.0 lot size. Okay. There's a good thing. Any PEEP movement in Forex, we have what we call PEEP. PEEP, just as we human beings, our movement is calculated in form of steps. I make 1 step, make 2 steps. In market, it's calculated in form of PEEP. So any PEEP that the market move, once you're using 2.0, you're making $20 for 1 PEEP move. Make another PEEP, $40. Another one, 60, like that. So if you make it backwards too, you also be losing. So if this guy is a baller, so if market moves about 10 PEEP in his favor, you're going to do $20 times 10. That'd be $200, right? In his favor, remember. You only need to make 10 PEEP move in his favor to be able to make $200. What happens if he makes 10 pips against this guy? He'll be down $200. I mean, it doesn't have up to $200 to be down. So you only need about 5 pips to move against. And what are the chances of market moving 5 movements against you? Because market moves really fast. Let me show you the current market move so you can understand how fast it moves. This market can move really very fast. It can move really fast. So it is the chances, let me just help you to answer. The chances are very high for market to move. It's 5 steps now, easy peasy. Because market is always moving. So it will always move 5 steps against you very fast. So that is the danger. What would have happened to that person? You only need 5 steps to be moved against him. Therefore, it's a whole $100 to be out. And there's one bad thing about what brokers do. If your money is finished, that you already put down, if it's already liquidated, what they do immediately, they stop the trade and pull out the money that they borrow you. And then your account is liquidated. So that's why United States will never allow their citizens to take a leverage of more than 1 to 30. Of 1 to 30. So let me just refresh this one. I think, okay, it's out. They will not allow to take 1 to 30 because they don't want you to give them, they feel leverage is a bubble. You give them too much leverage, they feel it's a bubble. They don't want their citizens to be crying, put all their portfolio all in one, select a high leverage, and then once they over leverage, then they are now backed out. So You now back out, you now remove your money. Just give them small amount of money. Let them be conservative with it. So that's their opinion regarding that. Okay, well said. Now, to me, I would say leverage is not bad. I have a different opinion as United States look at it. It's not bad. It's not as bad as they think. Not understanding what you are doing, that's what is bad. All right. So if you know how well to use leverage, like for me, I'm trading. I kind of traded the one I posted. You guys saw. Everybody was saying, hey, congratulations, nice, nice. I traded from 800 to 3,000. Do you think it was 1 to 1? I used to do that. No way. I used a bigger leverage. Why? Because I know that each account, they are dedicated for special reasons. There's some accounts that you fund, you say, okay, no, this amount is an amount of money I know I know that I can let go. Then this other one, I can't allow my $1 million account to go. So in that type of account, I'll be very careful. I want to choose a leverage of 1 to 100, a leverage of 200 maximum. Even proprietary firm, that's what they choose. Proprietary firm that is very generous, they choose the maximum of a leverage of 1 to 100. Most of other ones, they choose leverage of 1 to 50. But they tell you something on the front end that, oh, this leverage is 1 to something. But it's a lie. It's 1 to 50, 1 to 100 to be safe. Else, they might go bankrupt because people start losing crazy on their accounts. All right. So now, how do you change your leverage in the back end? How do you change the leverage at the back end? That's what is important. So first, share the screenshot of how to share the leverage, how to change the leverage on your back end on Xness, the one I have there. Now, if you have $100 account, small account, choose a bigger leverage. 1 to 500, 1 to 1,000, because it's a small account. You've got nothing to lose. $100 with $100, you're already losing. It's too small. It's too small, man. So that's the truth. Because did you guys see the amount of money you need to just play 0.01 now? You need $1,000. $1,000. So you don't want to be playing too much safe with $100. So if you have, say from $10,000 up onto $100,000, you want to choose a leverage of 1 to 500, 1 to 200. All right. So if you have a bigger amount of money, yes. So on Xness, I just did a quick screenshot right now. What you can see on your screen, you want to go to your funded account on your Xness. All right. You want to click on the 3 dot icon. There's a 3 dots options key. Then you want to go to change max leverage. You click on that. Give me the next slide. Change max leverage. Once you click on that, then options of other leverage will be popping up right in your screen. So you have a leverage of 1 to 2. You have a leverage of 1 to, you have a leverage of, show the other one. Leverage of 1 to 2, 1 to 20, 1 to 50, 1 to 100, 1 to 200, 1 to 500, 1 to 1,000, 1 to 2,000, even 1 to unlimited. That unlimited is adjustable. It's adjustable. That's how they set it to be. So show that one, the other one where no, the other leverage, the sums. Okay. Okay, so set maximum leverage. So you tap on those drop down icon. The next slide, on the drop down icon, then the next slide should give you the list. Okay, now they have 1 to 2, 1 to 20, 1 to 50, 1 to 100, like that, just as I listed earlier. Just know that 1 to something simply means if you deposit $1, they're going to give you what's on your right hand side times what is on your right hand side. That's just simply what they mean. So if you choose 1 to 2, you're going to be having, if you deposit $100, you have a buying capacity of $200, which means you can't do anything. Because the minimum amount of money you need to pay 0.01 is $1,000. So don't, if you're a small trader having $100, don't even think of selecting 1 to 1 or 1 to 100. It's too small. You can't do anything with it. Select a bigger leverage. So if you have a bigger amount of money, you want to select a smaller leverage because you already have enough money. You want to play it really safe. All right. So the next one, I'll let Shams. Is Shams there? Oh, Shams out. So let me take margin real quick. Let me take margin. Connect the screen again. Let's take margin. So margin is an amount of money that you deposit, you drop with your broker. Tell them this is my 1% of the bargain in this transaction. So when I'm done with my business, you can return it to me, or you add it to my profit and you return it to me. All right. So 1% of that amount of money you deposit, be able to place a trade. That's what margin is. Let's see the definition I have on the slide. I say margin is the actual amount of money required by a broker from a trader to open a position in the market. Yes, you must drop something to be able to open at least one position in the market. That's what margin really is. Okay, so now I need the screen. Okay, so let me give an example of what margin is as the screen is trying to cast. Say for example, you want to buy a house in the United States. You don't just go outrightly and just say, okay, I want to buy a house, just give them $1 million. No, there's some down payment you make. That's what margin is. So they can ask you to make sometimes can be 20%, can be 10%, and then you spread the other money in a couple of other months. But that doesn't happen in Nigeria. Everything about Nigeria are cash and carry because they don't trust you. Everybody is scared because you might drop 10% now, you start living in the house and you forget that house you're supposed to keep paying. So that's why it's only work in a place where they have a standard system. That's why I'm using America as an example. Somebody will know why are you not using Nigeria? We are Nigerian, so use Nigeria to give you an example so I will understand better. I don't think there's any example I can give as margin here in Nigeria because they don't work. Even in cars, United States, you pay cars, you drop a down payment, and then you're allowed to spread the other payment for like 20 years, 10 years, 5 years. Why? Because they have a stable system. Their salary is fixed, everything is stable. They know that okay, this person is not going to be out of job in the next 5 years. Everything is stable, job stability and all that. But here, it is not. Okay, so this screen is not working. Okay, good. Oh, so since this writing stuff can work, they can see it. Give me the screen then, since they can see it. I want to do a brief explanation of what it is. Are you connected to the same Wi-Fi? Let's make sure you're connected to the same Wi-Fi. The 5G 2.4. Huh? Okay. Wait. Sorry, guys. We are trying to figure out how to pull up the whiteboard. Yeah. Oh. My viewboard. Okay, good. Give me the screen then. You're the screen. Okay, good. So let's say right now, what is the current price of GBP USD? 1.226. Current price of GBP USD right now is 1.2676. 1.2676. This is the current price of GBP USD. What is ask price or bid price? Just know that this is the price right now. Okay. So I want to bring everything together so that we understand where we are at, what is leverage. I have an account of $1,000. I opened an account of $1,000 and I selected the leverage of 1 to 100 for ease of calculation. This is my account balance. Then this is my leverage that I selected at the back end. This is not going to show you MT4 on the front end, but what's happening on the back end. Then I selected the leverage of 1 to 100. That would mean I have a buying capacity of 1, 2, 3, 1, 2. That's $100,000. This is what my buying capacity. This is the current price, current market price, CM. All right. CMP. Then the next thing, in order for me to buy right now and to trade GBP USD, for me to be able to place one standard lot size, 1.0 lot size, remember, I need to have 100,000 units of the base currency. So the base currency in this case, this is base currency, this is quote currency. The base currency in this case is GBP, not dollars this time. It's going to be 100,000 pounds to be able to place 1.00. So remember, this is the unit. So units now, as at that time, that will mean I don't necessarily need $100,000 now again. Since it's in pounds, I need 126,760 pounds to be able to place trade. What has happened? I need this thing times here is going to be 126 converted 760 pounds to be able to participate in this market as of this time. This is the amount I need. 126. All right, this is the amount I need. Pound. To be able to place 1.0, to be able to make $10 on each peak movement, I need to drop 126,000. This is where leverage comes in. Brokers will say, of this money, don't worry, I'll drop 99%. Broker, which is what we call leverage. Then for you to be sure that you really want to place this trade, drop 1%. Drop 1%. This is what we call you are dropping this trader, or let me just say trader. This is what we call margin. Simple, right? So put this whole definition in your own words. This is how best I can explain it. So 1% of this amount should be how much? Since 126,760, so that should be 126 or one, two, that should be $1,267. Correct? 1%. Yeah. So that will mean you are bringing $1,267.60. That's the amount of money you need to drop. Okay. And then broker brings the difference. Just subtract this one, the difference that what the broker brings. Yeah. So, though you are making this much, but this is the amount of money you will be dropping. I hope that makes sense. So that's how margin works. So margin is the 1% you deposit in order for you to carry out a particular transaction. All right. So give me the slide. Let's show an example of a winning trade and also a losing trade. Let's show an example of a winning trade and a losing trade on an actual MT4. Let's check here. So you give me the slide. Okay. So right now on the screen that is right in front of you, I just put this one up right randomly on the chart. I went to the Firepit channel, Firepit group chat. I just look for anybody that plays trade and I just saved it, a winning trade and a losing trade. So first, the first screen, the first thing you see at the top there is this person is in profit of $8.55. Right? Then the next layer is he has a balance of 62.85 cents. That's the amount of money he deposited when he woke up, right? Then equity. We're not going to talk about equity today, but let me just do a background understanding what equity is. Equity is the floating profit right now plus his balance. So if you just do 8.55 plus 62.85, you see that it will give you $71 that is in 71.40. Yeah. Then margin is that 1% that you need to drop to be able to place this trade now that is in $8 in profit. The amount of lot size he put is 0.02. That is lot size on gold. So in order for him to sell gold at that time for 0.02, he needed to drop 1% of that amount of that transaction cost, which is $20.72. Now, it depends on the leverage you select. If you select, it depends on the leverage that you select. That's what will determine the amount of 1% that you'll be dropping. Imagine we had selected a leverage of 1 to what leverage did I use here as an example? I use 1 to 100. Imagine we had selected a leverage of 1 to 1,000. You'll be dropping something less. Do you understand? But here it's 1,000. So let me erase this one so that someone who is seeing this on a later date doesn't think. So this one is 100 that we use. So this person, I don't know the leverage you chose because since leverage did not show at the front, I don't know the leverage that this person I just uploaded this chart showed. So erase. Okay, where's erase now? Okay. Oh, thank you. Nice. I'm learning this new technology, but the technology is not technology well. What about this one? Back again. Okay, good. Okay. So give me And give me that slide again. Good. Then the next point and the next stuff you see again is free margin. Free margin is that amount of money that is left for you to place. Free margin, just as the name implies, amount of money that is left for them to come and take your 1% that you need to carry out under trade. So for this guy, his balance right now is $62. So from that $62, he has $50 left to place new trades. So if I want to buy new trades, if I want to buy new GBP USD, new Euro USD, any other thing, or new gold, let's say USD, I have $50 to spend left. If that money, if my free margin is zero, or you get to a certain point that is not enough, that's when whenever you place a trade, they'll say not enough money. You don't have enough free margin. That doesn't mean your balance is not still intact. It's still intact, but just that it's not just enough. And margin level percentage, important. Margin level percentage is percentage that it gets to where you get to have margin call. You know, we said about margin call when we're talking about margin level percentage. Margin call is a situation of the market when you are losing. Let's say, for example, you have three positions. One, you're losing $100. The second one, you're losing $200. The third one, you're losing $500. When you have a margin call, a broker comes in by themselves. It's a safety buffer that they use to protect themselves. They're going to close out the one you have the biggest loss first. They'll close out the one of $500 loss on your behalf because they don't want the losses to go so deep and start touching their own money that they borrow you. So that's what they just bring into action. They close it out for you on their own. So that is that on that. Show me a losing trade example. I wanted to see the two sides. On the losing trade side, you will notice that this person is on 1, 2, 3. He's on 3 trades. All right. And he has $11 as his balance. I mean, this example is favoring people that fund small accounts. That's why I selected people that have small money and it's a real account. So balance is $11 and equity for this guy is $2. Why? He's losing. Remember, we said equity is current floating profit or loss minus or plus your balance. So if you are losing, to minus from your current balance. If you are making profits, they'll add it to your balance. So that's what his equity is reflecting. So in no time, okay, let me not get there. You guys will already judge. So his margin, in order for him to place this trade, the 1% he dropped is 33 cents, 0.33. That's what he needed to place this trade. Free margin right now, amount of money you have left to place new trade is $2.39. So you can still place some new trade with 0.01 because he had 3 trades on gold, 0.01. He had on AUD USD, that's Australian dollar USD, 0.012. Another one on gold again, 0.01. So margin level percentage is 824. Good. Now, can you see that his equity is dropping 2.72? So what this simply means is this guy soon he will be liquidated if share is not taken. His profit, his account will get blown. So broker would have borrowed this guy some money now, right? Let's say, for example, they borrowed him. Let's say you choose a leverage of 1 to 100, for example. So for his take it back to the screen. Let's do. You'll be switching between that screen and this other screen. So and he has $11. So let's check his buying capacity now. I know you will not choose a leverage of let's say leverage of 1 to 1,000. All right. So he has $11. So it's $11 multiplied this screen. So he choose a leverage. This is what he chose. He chose a leverage of 1 to 1,000. So $11 multiplied by 1,000. That's his buying capacity, which would now be equals. How much? All this? Can you help me out? That'll be 11. 1, 2, 3. Yeah, $11,000 buying capacity, not his money. Buying capacity. Okay, buying capacity. So that means he can place even 0.11 lot size. You can place that much lot size, but then he has only expended 1, 2, 3. I've only used 0.03 lot size. So that's why I don't know that if he chooses 1 to 1,000. Go back to the slide. So that's why his margin level percentage has not gotten to 100%. So margin level percent, no matter what you do, don't like to get to 100%. If you get to 100% and even go below, depending on the broker that you use, you have a margin call. So the one where is he having most of the losses? He's having most of the losses on the first gold trade he plays, which is minus $7. Broker will come in and close out this trade on his behalf. They'll close out the $7 for him. They'll close out the next one. They'll close out the AUD because minus 71 minus $0.71. They'll close that one out for him and leave the other one for him. That's what they call margin call. I hope you guys get these lessons clearly. So I'll keep taking these lessons one at a time, until you guys understand. Now it's question time. So if you have a question right now, drop that in. Let me uh, uh, clean that question out, and then I'll tell you what the analysis to be looking at for this new week would be. All right, let's go on with questions. Question. Question, please. On YouTube, give me some from YouTube. Or Zoom. Let's prioritize Zoom. Let's prioritize Zoom. Who is that? Psychological levels on YouTube. Okay, don't worry, we'll get there. Okay.
Okay. Someone is asking on YouTube, on which broker allows change of leverage?
All brokers allow change of leverage. You can change leverage with all brokerage. Yeah, you can change leverage on all brokerage. You can change leverage on all brokerage. All right. On where? What platform? On Zoom. Okay. Does leverage also affect the commission charges on trades? No, it doesn't. The same amount of commission that will charge somebody who is using one-to-one, the same leverage that they're going to charge you, they're using $1,000, $1,000 leverage. All right. What is the advantage of low spread? Amazing. The advantage of low spread is anytime you cannot have margin, you can't blow your account 100%. All right. Since you're using a low spread, you're using a low leverage. Before drawdown get to that your balance that you have, they will have already cut you out. You still have some other money left. You're not putting all your account balance in risk. They're not giving you too much money that you can carry. Imagine, let me explain. You're going to buy a house. You go to Lekki, say, okay, I want this house. I'll drop $1,000. I'll drop 1%. Maybe you only have, say, $10,000. You know, because of that $10,000, you don't want to go and buy 10 houses. Keep dropping them 1,000, 1,000, 1,000, 1,000. And meanwhile, each of these houses, they need 100 million naira to be able to finally buy them. What is the disadvantage in that case? You have too many debts to carry for a drop $1,000. You still have $8,000 to play around with, do other businesses. From there, you still can distribute to other people. I mean, you still can be using to service the mortgage, as the case may be. So you don't get liquidated in time because you use low leverage. That's a good thing.
On YouTube, someone asks, can you change your leverage on proprietary firm?
On leverage on proprietary firm, you can't change leverage on proprietary firm. Proprietary firm, they give you fixed leverage as they wish. You can't change leverage on any proprietary firm. Someone asked,
can you modify your leverage while you're already trading?
No, you close all your position. It's always advisable before you, exactly. Thank you for that question. It's advisable you close all your position before you ask for a leverage change. Sometimes some other brokers, once you request for a leverage change while your trades are running, they'll deny you that. They'll say, make sure your trades are closed. Some they will close, they will do it for you, but then you have the impact. You see they'll close your trade for you. Even while you're trading, you wish your trade should still be running. They'll automatically close that for you. All right, it's always very important to close it out yourself before you request for a leverage change. So can we hear people talk on Zoom? Okay, let's have someone talk on Zoom to ask questions regarding this one. Let's make sure. Yeah, who is raising hand now that want to ask question regarding this question that we're talking about? Okay, we have. Okay, Pigman, please can you unmute Pigman then? Unmute, big man. Okay, let's just see. Okay. Can you hear me clearly? Can you hear me? Can you say something? I can't even see him on the screen. Is he here? Okay, Pinga, are you there?
Yes, sir. Yes, sir. I'm there, sir.
Amazing. So, what's your question, please?
My question is like, you said brokers borrows money. Like, how do they borrow the money? I don't understand about that part.
How did they borrow you money? Okay. They give you a form of leverage.
Okay, sir.
Yeah, in order for you to be able to place. Ordinarily, that 1.0, have you traded before?
No. I'm a newbie, sir.
Okay. So when you start trading, you will know that there are lot sizes. You get to that point. You know that there's lot size.
Okay, sir.
There's 0.01, 0.1, 1.0. Ordinarily, you should not be able to place 1.0 if you have a $100 account. Only with a $100 account without leverage. So it is because broker borrow you money to do that. That's the easiest way I can just use to explain borrowed funds. Because they borrow you money, that's why you are able to do that transaction.
Oh, okay, sir.
All right, you're welcome. Is there another question?
No, I'm good, sir.
Okay, amazing. So unmute the next person. Okay, someone is asking, what leverage can I use on a $300 account? On a $300 account, I would recommend you use a leverage of 1 to 1,000 because it's a small account. 1 to 1,000, 1 to 2,000, depending on what you want to do with the account. Account have different reasons and different motive and purpose. If you want to flip an account, the best leverage you want to use, you want to choose a higher leverage of 1 to 1,000, 1 to 2,000. What I mean by flip, you want to amount of money, small amount of money, bigger in smallest time possible. So you want to flip, you want to start choosing a leverage of 1 to 1,000 to 1 to 2,000. All right. So that's what you should do. But if you have a bigger amount of money, select a leverage of 1 to 100, 1 to 200, maximum of 1 to 500. If you have a bigger amount of money. That makes sense. So let's get another question again on Zoom.
Hello, sir.
Hello, what's your name?
I'm Samuel Chisom.
Samuel Chisom, nice to have you. What's your question, please?
You see now, how do you determine the leverage to use? Like, how do you determine it? Not me telling you that I have like $2,000 and you be telling me leverage to use. Like, how do I determine the particular leverage to use?
Exactly. Fantastic. How do I determine is that calculation I just gave you now? All right. So if you're a conservative person, I just gave you a calculation as to how leverage came about. With all this explanation, you already know, okay, if I have $200, this is how much I should choose. I said earlier, leverage is an amount of money that your broker borrowed you to do business. Now, the next question you now have to ask yourself is, how much do I have to bring in? And what is my essence of this business? How much do I want to gain in this business? You understand? So that will not determine the type of leverage. If you want to gain bigger amount of money with small amount of money, then you want to be choosing a leverage that is huge, like 1 to 1,000. That's a lot of leverage. 1 to 500, 1 to 2,000. That's a lot. But then if you have like $50, $100, or this small amount of money, you don't have nothing to lose. Just choose a bigger leverage. All right. But if you have a decent amount of money, you know you can't let go. You want to be protect. Then you start selecting leverage that is quite mild, like 1 to 200, 1 to 500, 1 to 100. All right. That's how you get it. Maybe you watch this video again, you should understand. Go through the meaning of when I said leverage, how I calculate it, and then that will make you to make a better decision when you are selecting leverage.
Thank you very much, sir.
You're welcome. The next person on Zoom. Okay, I have UD. Unmute UD. This guy. You've muted him. UD.
Hello, Mr. Jeffrey.
Oh, Peter Koje, how you doing?
I'm doing fine, thank you.
Amazing.
Thank you for the amazing work.
Appreciate it.
Okay. My question is this: because my account is not very big, I have to manage it with a smaller lot. I start to use a smaller lot, but in the process, I see that the trade, the market is going in my favor, I begin to add more entries. So in the process, I have given multiple entries. In some cases, I see you doing it. You have multiple entries, and then when you want to exit the trade, you can exit the trade at once. But that's why I'm finding it difficult to exit the trade. If I have multiple entries up to 20, and the trade is going against me, and I want to check out, how do I do that in order not to be caught in the middle and go?
Okay, good. There are two options. Number one major option that I do use recently is MT5. MT5 have a new feature that allows you to do bulk operation and you close all orders at once. And it's so unique that that feature is so nice that you can even decide, let's say, for example, you have some sell orders on GBP you have buy order on Euro USD, for example, if you trade multiple pair, you can close out only the sell order and you leave out the buy order. So it's so dynamic and customize only on MT5, not on MT4. But however, if you're on MT4, there is an EA, expert advisor, that could help you close out those things. This expert advisor, I think I make a video about them of recent. So an EA, you just have to plug, but that's a long process. But the easiest way, switch to MT5. MT5 will allow you to do that. That's what I did. The one that last video you saw that I placed a lot of trades, I used MT5.
Okay, it's clear. Thank you so much.
You're welcome. So now let's go on YouTube. On YouTube, let's take some questions on YouTube. Display it on the screen. Just click it. How does having a higher leverage benefit the broker? Did you see it? You don't want to be displaying everything on the screen. Anything display here is showing to everybody. So hi. So how do you what? How does it doesn't benefit broker? Broker does the only benefit you may want to think is they allow you to have any leverage so that you can lose your money fast or you lose your money in time. If that's a benefit, but you can also choose not to lose your money too in time. So I don't think it's just flat. They give you leverage, so they're not manipulating anything. All right.
From Neville, if my leverage is 1 to 1,000,
okay,
and I'm using a $100 account, what should my lot size be?
What should be my lot size? Okay, you're asking regarding lot size now. Leverage is 1 to 1,000. You're having $100 account. That's $100,000 buying capacity. So if you have, still treat it as you have the $100 account. Your lot size should be 0.01, maximum of 0.05. 0.01 and maximum of 0.05. That way, 0.01, remember, for each pip movement, you are making 10 cents. And you also stand to lose 10 cents. If you use 0.05, for each pip movement, you stand to make 50 cents. And you also stand a chance to lose 50 cents once you move against you in terms of pips. So the next question you now start asking yourself, how much can I risk in a day on this account? That is what you use to determine the lot size you put on an account. All right? That's what you use to determine the lot size you put on an account per day.
The next question.
Okay.
Joshua Olugbemi, what condition for a firm to removing a leverage when losing? What are the conditions for a firm to remove a leverage when losing?
Okay, the condition that a broker needs to see for them to take back their money. In fact, this is how they even do it. They don't even do it. It's already set. It's press play and it's automated system. Here's how it works. Anytime you place a trade, your margin is held down. Your margin is held down for two reasons. But the biggest reason why your margin is held down is not that so that you can just commit your money. No, not just only that. They use that margin as a safety net. So whenever you are losing, first they are taking from your equity will be reducing. They are taking from your balance. Let me do a diagram approach. Give us this screen. Give us this screen. Thank you very much. Smart. Okay. So let's say this is your account balance. You have $100 account balance, and it is like a jug. It is this full in your jug. All right, this is $100. This pie is $100, and then you drop 1%. Your 1% is here. This is your 1% that is filled now. All right. So as you keep losing, let's say you lose $100 again. I mean, you lose $10. This part is out. You lose $10 again. This part is out. You lose $10 is out. You don't lose more. Keep going out. So when you now get here, once it's now time to about entering your margin, yeah, they'll close out. You have a margin here. You have a margin call. Worst case scenario, you must have been in time of news. You have a candle flashing, right? On sudden flash. The worst case scenario is for their money to be touched, your 1% will be affected. Finish if they are not fast enough. If this 1% finish, they are not fast enough from to enter their money, their leverage funds. So they don't want anything to touch their money by all means. So either stop you here or they won't stop you once your leverage is once your margin is being affected. Most case scenario, you can't even get here. Don't worry. That is the condition that get met in order for them to close you out. I hope that makes sense. All right, so now let's go to today's chart, current chart. Let's make some money. Let's make some money. I'm sure everybody's question, there's happiness now. Everybody's question has been answered. It's been answered. Good, good. So let's go. Let's talk about today's chart, the current market price. The first thing I love to do is to do an analysis. Is Shams on? Okay, now before I do my analysis, Shams, can you bring on Shams? Shams, can you hear me?
Clearly, I can hear you clearly.
Go ahead. Tell us about what you have to say about leverage margin regarding US 30 and how they should apply lot sizing regarding the margin they should select, the leverage they should have, and how to apply the lot sizes, because the lot sizes is unique on.
Okay, basically you've done justice on what is leverage and what is margin per se. And one question caught my attention, which someone said that what is the cost of you changing a leverage from your broker end? It means that he is thinking that if you change your leverage, you're going to charge you from broker. Well, it's free of charge, right? When you change your leverage, nobody is charging you a dime from that. And when we're talking of leverage on US 30, is quite different, because you all know that one standard lot on US 30 is equivalent of just 0.1. So before you will be able to open one standard lot, you need $10,000. But on other currency pairs, as Sir Jeff has already explained, you need what? $100,000. So if I open one standard and another person open 10 standard, he will need $100,000, while me, I will need what? $10,000. Now, when we're talking of 1 to ratio, whatever, before you open your account, you will see them, many brokers, they will even tell you that trading Forex come with high risks and choosing a minimal leverage is very, very advisable. Now, going through the comment section, I saw a mentor who is in this live class that he is telling us that he is telling his student to be using 1 to ratio 100 on $100. And I want to tell you the truth. When you're choosing 1 to ratio 100 and you have $100, you won't be able to do anything in this market. You won't be able to even open a reasonable lot size or position. And leverage works in the sense that when you're in profit, your leverage will increase and you will have more capacity to be buying or be adding more position. But by the time you are in loss, your margin and your leverage will be reducing. So in court, assuming you can be able to open one standard, by the time you open that one standard and the standard, the position must have gone to your direction and in some profit, that profit that is accumulated, right, is being transferred back to your balance, and directly it affects your what? Leverage, such as equity and what? The normal balance. So by the time you added that floating profit, assuming again you were floating on $20, that $20 will be added to your what? Leverage. So you will be able to open more position, banking on that leverage. Now, when the money or when the trade is going against you, right, your leverage will start reducing. Your broker will start taking it one after the other. Then before you know it, ideally you are supposed to open one standard, but this time around you're battling to open just 0.5 or 0.6. That's because the loss that is being accumulated, it will be deducted from your balance. And when it's being deducted from your balance, you're going to have a limitation in terms of entry. So I love you guys, and I love this topic because it's not all about we telling you to buy, sell, buy here. Like buying and selling is the end product of Forex trading. This is the starting product. And if you don't know all these small things, right, you will be misfiring up and down in the market. So I love you guys, and peace out, guys.
Thank you very much. Okay. So that's Sham's piece, and I love how he kept it simple. And that's Shams, King of Yesterday on this channel. Okay, so give me the screen. Let's go. So what Sham said, it increases. Good thing about free margin, it increases as you make profit. If you make profit, you will get to use your unrealized profit to still place new trade. This is what he said. I love that. That's some part that I almost forgot there. Thank you very much. So now on the screen, you guys notice that we have high and low of the week already set, which is this is the first candle, and then this is the second candle, the highest and the lowest. As a matter of fact, this week is a flipping week for me. I'm going to be flipping account. I'm going to be showing more videos. I have a video that is going to be coming on live. That the flipping video I did, how I was able to do it. I'm not even going to be talking too much. Just really taking actions. I'm not going to be explaining too much. We're just watching it. You already understand what I'm doing already. I believe in learning via osmosis. That's one of the best way to learn. Just watch people do things and then see, okay, this is why this person is doing it, and just try to form an understanding in your brain. That way, you can get to draw an inference as to why things are being done and why they are done that way. You just learn like that. Okay. So now we have first candle. This is the second candle. So the highest of the 12, the highest between two of them was this one. The lowest between two of them was also. So I have that already mapped out. Nice stuff. Okay. So the next thing is I want to go on 1 hour chart. Let me shrink this a little bit more. Shrink a little bit more. Let me shrink this a little bit more. So I'm drawn on my trend line. I taught trend line in the last class where we all got to learn about how trend line works and all of that. So this is how I have trend line. So I said in trend line we have 2 touches. We should have at least 2 touches before we are able to. This is 1. This is 2. All right, here is the third one that's currently happening. So this my hold, my break. This my hold to go up, or it's my break to the downside. For me, I think it's most likely to hold to go up. That's what I'm thinking right there. Just to take my thought, but don't worry, this trade will should hop on it. December usually for me, November, December usually one of the fantastic trading months for me. Remember the last one, even the last one, it's always one of the fantastic ones for me. So even before we have holidays, we should really hop on this trade. So let's go on 15 minutes time frame. Let's go on 15. Let's take a trade. So now, why I love to take a trade now with you guys on Monday, or why I love to call out a trade on Monday is sometimes I just usually think to myself, I want to gain so much mastery that even if I wake up, I'm able to place trade anytime, any day, and I'll still be able to make most of the time maximum profit. Because what actually makes someone to make profit in the long term is not necessarily how careful you are, is mastery. If you're able to master some chart patterns, and whenever they form, you're able to shoot them the right places, I think you should be able to make profit. All right, and how you also manage them. So that's why I just love to call out trades. But then I still don't take it because that might ruin my psychology as we speak. So that's why I don't take trades on Mondays. But from Tuesday, any trade you see I call, I'm trading it. Any trade you see I call, I'm trading it. Take it to right. So that we stop here. Good. So what I would love to do at this point, is first, where are we currently at in the Forex market now? I have price really testing off the zone, to me, I'm looking at more for buy at this point. So the worst case scenario is price coming to touch here, take out that gray out box, put it here. Put the gray out box here. The gray out box here. The gray out box is here. No, from where I started. Okay? Down, you span it to your left, so that exactly where I started. Again, yeah. Good. Extend it into the future. Good. Leave it like that. So this is what I'm looking at for. Anytime price come here, I'll be longing. This is what I'm longing is I feel that this whole move that is here, that is like a big noise. You just say noise, it's like a touch of to still bounce up. We are still so bullish. So anytime that market is bullish, you don't want to be doing opposite side. You don't want to be doing opposite side. So you just want to be following through with the trend. So how do I trade this, Jeff? When price come on here, can it hold? When price come on here, long. So take a long two, put it here, making your stop loss to be this low. Making your stop here. Good. Take your take profit twice of this stop. Twice. So since this stop loss is how much? Keep going. This is 1 to 1.5. Once it's 2. Yeah, you pass. Aha. So that's where we are anticipating that price will get to. Please take a screenshot. No. Entry should be on psychological level. Bring it down a bit. Bring entry. Just only the entry a bit to psych level, which is 1.26500. Yeah. So now you have to increase the reward. Tap on it again. So the reward will be higher now. Bring it down. Down. Yeah. Very, very actualizable. To 2. So you're actually longing from one psychological level to the next high of the week. That's what is currently going to happen. This is my buy projection. Wait for price to get here and then you long. That way, what would we have seen? Number one, our confluence is now. Let me justify the reason why I'm saying that. So someone will ask soon. Number one, psychological level is there. It's saying we should buy. That's one. Number two, there's a trend line bounce off. Third one, this whole one is also a trend line bounce. Because we're on 15, that's why this noise is like shadowing it out. So trend line is saying buy. Number three, low of the week. Low of the week. And number four, W chart pattern. See, everything is complete here. 4/4. Chart pattern. So chart pattern right here. So once price get here, you do the needful, money on the floor. So if you're using 1.0 lot size, that will mean for this movement, tap on this, tap on the prediction. I'm expecting you to come out with a profit of 17. You should come out, if you're using 1.0, you should make $730 on this trade. If you're using 10 standard lot size, you should make $7,300 on this trade. If you're using 100 lot size, this is what I'm going to be using. If it happens tomorrow, I'll be making $73,000. 300. That's what I'll be making. So if you smaller boys now, if you're using 0.1, you'll be making $73. Hey, in the same business we all do. So make 730, you're making 73. No problem. The young shall grow. 0.01 guys, you'll be making $7.30. Increase your what? Lot size. So these are the statistics that we're expecting on this type of trade. So also, if you're also losing, if you lose, you'll be losing. Let me erase it. I'm sure. Just take a screenshot of all of these things. For those who want to study these things later, take a screenshot. I'm about to wipe it. Screenshot taken, right? Losing, if you're using one standard lot size, if you're losing one standard lot size, guys, we'll be losing $359. All right. For those who are using 10 standard lot size, we'll be losing $35,900. Me, I will stand a chance of losing this by tomorrow. No, it's supposed to be, because this one is supposed to be times 10. No, it's 350. Then this one is supposed to be 3,590 something. Oh, look at you guys are seeing me making mistake and watching me. It's supposed to be 3,590. 590 rather. Then this one should be I'll be losing $35,900. Smaller boys now will be losing their their size too. 0.1. They'll be losing that's 0.1 since it's just they'll be losing $35.90. Let's give them their cents. 0.01 will be losing $3.59. This is the loss one. This is the risk. This is the risk you stand to make that other one. And the question now, is it worth it? That's the next question before you hop on this trade. To me, it's worth it. I'd love to hop on this trade if this plays out by tomorrow. So is there any question regarding chart in general? Let's take about 3. We'll take 3 and then we'll call it a day. We'll take 3 on YouTube, take 3 on Zoom. And what other platform? Okay, just Zoom on YouTube. Okay, Zoom. Any question on Zoom? 3 questions regarding chart in general before we call it a day now. On Zoom, yeah, ask to unmute. UD, yeah, UD. Is it there? Okay, it's not unmuting. Maybe the question he has asked that he wanted to ask has already been answered. Is there anybody that wants to ask question? Just raise your hand again. Let's unmute you. Check people whose videos are turned on that want to ask questions.
Yeah, sir.
That I like raising your hand. Yeah, good morning, Miracle.
Good morning. So my question is, at the current market, because this on Friday market you take I was confused by your entry. I was confused. Don't know if you can make me clear, sir.
My Friday's entries.
Yeah, I have your Friday trade.
Okay, but I didn't call out the trade.
No, I will not call out the trade.
Okay, you traded it.
I was waiting for more confidence there, so before I come back, and the candle pattern confused me, so I just let the trade. When I come back, I see that you have took that trade and make some crazy money.
Okay, now. Yeah, now see what I saw. So immediately when price got to this point, I started getting it from here. That was my point of entry. Started stacking. I have a video of that. That video will be dropping on Wednesday. Started buying a lot around here. What I saw is a first touch, second touch, then a third touch, right? At that time. Then I know that this third touch hasn't gone far. So as a result, this second touch is null and void because he was unable to take out this one. Do you understand? For a touch to be counted as a touch, he has to be able to take out the previous one. For sake of relevance, I see how to let this trend line touch, because the more touches, the more points it touch, the better. You remember what I usually say? Do you understand? So as a result, I counted this one and this one as one. All right. So from here now, it went up one. This is my two. So immediately I saw that price was already touching on this trend line and psychological level was closed by two things. And I've seen that there's a first leg here too. So I felt like, okay, the B is about to happen. So I started getting it. So I had this drawdown. I left it. I think it was a news event I pushed up or something. Maybe came back then and I started adding new positions. As I had about, I think I have about more than 200 positions because a flipping account. So that's how I was able to get that entry. So I know, or I just maybe what I know that is different from what you don't know now is how to count trend line bounces. So you know this one, this is a bounce, right? Let me clean it up and start. Can you shrink it for me? Okay, it's fine. So this is a bounce. One. This is a bounce. One. Retest. Let's say two. So now I'm counting to this point. I can't count to this point. Why? It didn't take out this high because earlier 12 theory is with you. So you notice that this one will always take out this one. This is a low, this is a high. This is a lower high, this is a higher high. This is a lower high, this is a higher high. So we did not have this is not higher than the previous high, so hence this is not counted. So we have 1, 2. This is the next high. Then bounce. These are not lower. Another lower high. From here, start going up again. So that's why I counted this one as first touch, second, and third. Even this one didn't even pass as second because I was already thinking this was a fake out. I was already thinking that this one has already taken down here, that I was wrong. But my stop was somewhere around here. If the price get there, I agree to be wrong. But since that did not happen, it kept going on. That means I was correct. So that is that same reason why I'm also looking at this zone as a fake out that is going to go up. That's because of the current market behavior in this range. That is why, based on that structure. I hope that makes sense. So you notice something that was formerly bearish right now is already bullish. Zoom in on the current candle action. But then don't go in yet. Don't go in yet. We want price to come here. Once price come here, you should long it up. That's when you make profit. We want price to come here. We want price to come here. When price come here, then you start buying. All right. So one more question again on Zoom. What's his name? Smooth. Oh yeah, smooth people. Let's go. Is anybody that whose video is turned on that is raising his hand? I want to talk. Oh, his video was only turned on. Okay. We want somebody that is currently there. Are you there now?
Yeah, I'm here.
Oh, amazing. Smooth people. Let's go. I can't hear you smooth. No, it's not smooth.
Yeah, good afternoon.
Yeah, good afternoon. I think it's better now.
Can you hear me?
Yeah, better now, better.
Hello?
I can
Can you hear me now?
Better, yes, better.
Hello?
It's a lot more better now. You can go ahead.
I think the network is lagging. But I wanted to find out, okay. I want to find out on what time frame do you confirm a chart pattern? You know, you can see the chart pattern on a 1 hour or 4 hour on a 15 minutes time frame. On what exact time frame do you confirm a chart pattern?
15 minutes. That way I get to see I get to see my entry faster. 15 minutes.
Okay, so even if you see the same, you see something different from 4 hours, you just stick to what you see on 15 minutes.
No, the chart pattern is chart pattern anyway, however, but it gets to develop faster on 15 minutes. That's why. So if an M is forming on if an M is to form, you get to see it faster on 15 minutes before you see it on
Okay.
4 hours.
All
That's
right. Thank you. That's what I just wanted to find out.
Yeah.
All right. Thank you. Anyways, the one that you came to, where you came to you, in nasty black in his house.
Go. What's up?
Thank you so much.
Yeah. Let's take some YouTube.
Okay. Sylvester Udoro says, yeah, please, is it wise to change TP or SL after taking a trade?
If you want to change TP, it's fine, but don't change SL. Already you have distorted your plan, your trading plan. If you change SL, don't try to change SL. Okay, the next person on YouTube. On YouTube.
Somebody is asking again.
Yeah.
Sherry Odejayi, Sajef, where is that trend line coming from?
That trend line. Okay, shrink the chart for us. Let's see. Shrink the chart so that you can see where the trend line is coming from. Go to shrink it very well. Go to 1 hour so that you can see far. Yeah, like this is where it's coming from. Can you see? Just take a screenshot. I know why you're asking. You just want to also be able to replicate on your own. So you take a screenshot and check. That's where it's coming from. Everything has origin. Everything has origin. Just make sure it touches the right levels. The next question. How many? The stop loss is 35 pip stop loss, 35.9. And you take profit is times 2 of that. Yes, you can set a buy limit. You can set a buy limit. If you want to. Someone asked if you can set a buy limit. Yes, you can. Okay. What other thing?
Stefan is asking, what entry confirmation will we watch out for?
Entry confirmation, weak rejection. Entry confirmation to watch out for when price is there, weak rejection. 200 position. Hey, if you can control this, if you know how to do the proper trade management, it's fine. You can. I don't want to cap your expectation. Then also get ready for the losses if it come. If you're just asking questions to catch cruise. Okay, those on Zoom, are we cool? Hope every question is answered now. We want to call it a day now. How can you stay consistent? Keep trading. Some people are raising their hands on Zoom. Check Zoom. Check Zoom. Let's take some Zoom. Zoom. Somebody say I have a question. Okay, Zoom guys, let's go. Whoever that is raising hands on camera, prioritize that person. If his camera is turned on and he's raising his hands, prioritize that person. That shows that question is really important.
Hello.
Okay, Steve. Okay, Steve Ray, let's go. Good afternoon, sir. We can't hear you for some reason. Oh, we can't hear you, sir. In case you can hear me, I can't hear you. All right. So you want to try to unmute the next person while he's just leave him unmuted. We'll come back. Okay. Sammy, are you there? Can you hear us?
Yes, I can hear you.
Please go ahead.
Sir, my problem is I have this problem of when I analyze a trade, right?
Okay.
If I analyze a trade, I know it would go in this direction, right? But something like it's just a psychological issue. Like if I analyze the trade and I place the trade, if I see it starts moving, I beat, right? And then when it starts going in my favor again, I will hop in again. So that's just basically hopping in and out of a trade. And by the time, and on my hopping out, I will be hopping out in losses. And by the time the trade will start going in my favor, like I would it would have taken a chunk of my account, which is like a very big problem for me.
Okay. The problem is you lack a trading pattern. You lack a trading plan. You know, you don't have, okay, when you wake up, this is how I want to trade today. This is target I want to hit. This is the amount of trade I want to take. I only want to trade long session. I only want to take about 3 positions. I only want to take about 100 positions. I want to take 200 positions. You should have everything already planned before you go into the trade. When you start thinking, you don't think while you're on a trade. You think before you go into the trade.
Right.
All right.
That's my exact problem, because when I'm in the trade and if it goes in my, like, against me a little bit, I would tend to cut out.
Yeah.
And if it starts going in my favor again, I will hop in again.
That is it. So before you go into a trade, you already plan out, this is what I want to do. Okay. So if a trade is going, if a trade has gone on your favor, trust me, you've already lost that trade. Leave it, let it be. Else, you keep gambling. There's a thin line between gambling and trading, a very thin one. So when you leave your trading plan and start doing whatsoever you feel like, what you think like at that particular time, you started doing tete. So you have to have a trading plan fixed. So it's important, and you follow that trading plan to the latter. So it's hard to actually follow. I'm not even going to lie. When you have a certain things written, and it's hard, but then with practice and with consistency, you definitely be able to get it with time. All right. Keep your trading plan. Keep doing it. Keep doing it every day. Okay, let me give you a challenge. Do this thing for 2 weeks. You're in a mentorship, right?
Yes, sir.
Good. Do this thing for 2 weeks. Whenever you go on your chart right now, trade London session. You know the time we always get up for London session. You know the time, right? And New York.
Yeah, 9 o'clock.
Okay. Only trade 5 entries on each session. If you have exhausted your 5 entry on London, wait till New York. If you exhausted your 5 entries in New York, wait till the next day's London session, except you trade Sydney or Tokyo session. So you trade them session by session. So if you've exhausted any of your position for that day, nothing would tempt you to take another trade. Is that a promise? I'd like to see your metrics next week Friday. Is that good?
Okay, sir.
Amazing. I'll be watching out for your metrics for Friday account review session. All right, I'll see you.
All right, thank you, sir.
Yeah, you're welcome.
Yeah.
So one more person on Zoom. Okay, so Steve Bright, are you there? Can you check on Steve Ray to see if he's back with his microphone?
Thank you very much. Good afternoon, everybody. Good afternoon, Mr. Jeff. Please, my question is concerning the trade you placed today, the analysis you placed today. From the previous explanation, you made mention of the high and low of the week, and you said once the high or the low of the week is broken, which means the trade will be going in the direction to which there was a breakout.
Yeah.
And from the analysis you gave now, you are asking us to wait when the trade goes down, which means they have broken the low of the week. Then we will not take the trade upwards again into the zone between the high and low of the week again. So I don't know. I just want to get clarification why it seems like we're going against the principle you gave in your previous lesson. So that's just my confusion.
Amazing. Remember, there are exceptions to the rules that break below your psychological level low. I mean, your low high and low of the week. The exception, remember, is how many people do you keep an open mind for?
Above 50.
Yes. So if you calculate from that point of break to point of entry, you notice that it's not up to 50. Can you kindly help me to zoom on in, Sergi? Zoom on in. Zoom in, like you want to put your cursor here and zoom in your current chart. So from here to here, calculate the number of pips from the current here, from the low of the week to my point of entry. If it's up to 50 pips, don't take it. It's just 17 pips. So that's why. So I think it's going to be a fake out happening to that point. So that's why I said, okay, it's a viable point for us to go long on it. Does that make sense, sir?
Yes, sir. Thank you very much.
You're welcome. Okay.
Someone is having a question on YouTube. The person is saying, Sajid, would you advise me to pay for mentorship or fund $100 account?
I advise you to pay for mentorship for $100. That's tempting. Okay. First, if you know what you're doing, fund a personal $100 account. But if you are sure that you know you lose that money, or chances are high that you lose that money, then pay for them. What's the essence of trying to do it yourself when you don't even know what you're doing? So first, get to learn how to do it, and then from there you can trade an account. That's what I would advise you. But if you know you can trade that account yourself, 100%, go ahead and fund it and try it out for yourself. Because trust me, the best way to actually learn to is also doing. But what is the essence of doing when you don't know what you're doing? So that's just what I have to let you know regarding that. So that'll be the end for today's live stream. Next week, Monday, same place. I almost said same station, same time, same place. We see you guys. Is Steve Ray there now? Is Steve Ray there? Network is still very terrible. Maybe you ask your question on live class when I'm live on Wednesday with you guys. Or you can ask Sham. Sham is going to be live in a couple of minutes from now. So you can ask him right there. All right. Thank you guys for coming out. And I'll see you guys in the next one. Bye for now.